Rita Garwood, editor-in-chief of Monitor. We recently published a three-part article series on our website that was titled Future-Proofing Your Business for Digital Success. And that series explored how organizations can move from experimental side projects to enterprise-wide adoption by building scalable digital foundation. The author of that series is with us today, Brendan Cronin. Can you introduce yourself and tell us what you do for the industry?
Hi, Rita. Thank you for letting me join you today, and I look forward to the conversation. So I'm with Great American Insurance, and my role is around technology and innovation. We're an insurance provider to the equipment finance industry, and we've been in the business quite a while. I've played a role in redeveloping and in some ways transforming some of our products and services. And hopefully some of that experience is relevant to this discussion. Also looking ahead to AI and some of the things that are coming along for our industry, starting to get into those areas as well.
Awesome. So today's podcast is going to build on that three-part series that you wrote for us. And you also had a LinkedIn post that I was looking at after we published the series, and you were talking about fuzzy data. I'm hoping to get into that as well. I thought that was really interesting. So for those of you who have not read the series, this still will be an interesting conversation, but I do encourage you to go back and check out the series. We will link it all up on the website, so you can read the whole thing in addition to listening to this podcast. So on that LinkedIn post that you published, you compared unstructured data to a Muppet, which is an interesting comparison. You called it fuzzy and unpredictable. So for an industry that's built on, a lot of order and a lot of verified numbers in ledgers, how do leaders begin to shift their mindset to be more open to the possibilities of fuzzy Muppet data?
Yeah, I think the important thing to remember there is a lot of the data we're talking about, our organizations already deal with, and they're already on our desks, they're on our screens, they're in our meetings. It's just that we previously hadn't really thought of these things as data. We've had 50 years of databases and ledgers and systems of record where it is a very orderly approach to managing information by necessity, often for financial services firms. That requires sort of discipline and precision, and that continues. Obviously, that doesn't change. But now we have the tools and technology to take sort of the layer of information above that. It could be productivity software, it could be conversations, transcripts, emails, notes. Those things are really accessible as data. And the unpredictable Muppet part is it's going to feel a little odd at first. It's going to be a little disarming and maybe strange to sort of think that this is something that is information in a way that we hadn't thought of before. Probably in a business like yours, Rita, like communications and media, you're dealing with that type of information as part of what you deliver. It's all about content and communications. Now organizations can kind of take that layer and make it actionable and use it for insight.
That's great. So you've mentioned that a team's adaptability and curiosity often matter more than technical skills. And when you're building team literacy, what is the first step that a traditional finance firm should take to make AI feel more like an extension of the team rather than a threat?
Yeah, and that's a great question. And I've seen some of the numbers out there. There's a lot of concern about AI. There's a lot of folks that feel like, we hear about white collar jobs being impacted. And one thing I'll say about that is I think the right frame there, people talk about jobs replacement, but if you really think about it in terms of task replacement, that's where AI doesn't really change the org chart and the people that are valuable to doing what we do, but it starts to change the work that's on their desk. But I'd say another way to go with that is look at your people in the organization and think about their skills. In the past, sometimes there's a bit of a divide between the business people and the technical people. And I think what you want to look for are the people that are semi-technical. Maybe they don't have a technical background. They didn't go to school for computer science or data science, but they have a good understanding of those concepts and they can sort of see the value. It's really about sort of a more abstract thinking approach to some of the technical things. But if you have those semi-technical people that understand the business and understand the technology, they can kind of paddle on both sides of the canoe. Those are the people who I think we need to recognize and elevate and put them in charge of some of this or give them some responsibility. Most organizations have them already, my guess. They might not look at it this way, but they have someone who understands the system and understands the salespeople. Those are very valuable people, and they're the ones who are going to naturally start to apply the value of something like AI within an organization.
So when you're saying you're looking for people who have, perhaps some technical skill, are there like kind of things that you can pin out in a person that would stand out to you as maybe they're not, as you said, completely technical, but they have that ability within them? What would you look for?
I think one thing that always surprises me is sometimes their background isn't what you would expect. I have someone on our team, and I think she studied history in school, and she's so a liberal arts background, or maybe something that might even seem unrelated to financial services or technical. That can sometimes be a clue that they're going to have a good ability to take on some of these things. Often they're veterans. Sometimes they're people that have been in the business over the course of change. So they have a good eye as to what works and what doesn't. But I think you also have to make sure that they're not so entrenched in the business that maybe they're a little resistant to change. So I think it's the right balance of maybe a bit of a cynical eye, but an eye towards the possibilities. And like many of these issues, it really is behavioral and cultural. And not trying to dodge the question, but there's a little bit of sort of I know it when I see it in the right person. But it is an unusual. Often it's an unusual background. They can be. It could be a technical background or a business background, but they've often had a winding path to get where they are.
So they've seen a lot and they're open to change, but they do have a good understanding of the business. Is kind of
Yes.
what I'm hearing. Okay, that makes sense. So a lot of organizations might hold back because they assume that transformation requires a lot of, a total overhaul of the business. For companies who are thinking along those lines, how can they start small today while ensuring that their strategy still remains future ready and scalable?
You know, I've been in settings before where people are sort of put in a room and told, we're going to innovate today in the next hour. That never really works. I think it forces people into an artificial environment, and sometimes you don't get the results you'd hope for. I think what we've done within our organization, what I've seen be successful elsewhere, is to sort of build on your existing planning and strategy practices. And hopefully most organizations have these where you do take time away to think about the next year. You do put people in a room to sort of do some planning or strategy sessions. Those should continue, but I think the obstacles that get surfaced during the SWOT analysis or the forecasting, those things should be set aside, and that might be what you direct towards your innovation efforts or the team that's trying to apply new solutions. Another way of saying that is some of the obstacles in our business that have existed for years might not be as big these days. There might be ways to solve those with some of these new tools and technologies. And if those come up as part of routine strategy or planning, give them a little extra space to address them. So the point here is to not build a separate practice around innovation or having these type of projects, but to make them an extension of what exists. And that also helps to ensure their longevity. I think one of the things that happens is there's a shiny object, there's a pilot project, and then it falls by the wayside. But the more you can sort of fold that into your existing business practices and how you manage a business, then the more legs it has, and it will also be able to survive and thrive a little bit of recalibration because if you're doing something new within an organization, the chances aren't great you're going to get it perfectly right on the first go. Sometimes it takes a couple of cycles, and if it's part of your practice and something you do a little more routinely, then I think it has the support it needs to thrive.
So in the article series, you were talking about structured and unstructured data. You noted that that structured data tells us what is happening, but unstructured data tells us why. Can you share a specific example of how a piece of messy data, like a customer email or a maintenance note, can prevent a loss or identify a new opportunity in equipment finance?
Yeah, I think the way to look at this, and I was when on this topic, I'm always looking for common ground between what we do as an insurance company and what our clients, equipment finance companies do. What happens when you don't close a sale, when a buyer declines. When you have a new customer, the revenue shows up on the ledger, and you have a metric, you have a number. But the unknown comes in when someone passes on something. And that becomes subjective data right away. Now it's easy enough to go, well, maybe our price was too high and that, so you set those aside. But what about that customer where your price was better, but they said no? That's gold in the sense that that is unstructured data, or it will take a different set of tools to capture that information. The folks in Silicon Valley have this term signal, and you hear that sometimes, but customer signal is very valuable. And when we think about unstructured data, when we think about these unknowns that we want to make more quantifiable, I think it's all about capturing that signal. So I think, to my mind, when you make an offer and someone says no, and it's not a price consideration, there's something you need to know. There's something missing. And I think that's where there could be some opportunity. You mentioned the notes field. Well, that's another interesting one because if you look at software, whether it's a CRM system or maintenance system, there's big vendors that do this. There's always a notes field, and you fill in this field, you fill in this field, and then you add a note, right? And the rest of the information is structured data. It's what date something happened, how much something was. Those are quantifiable things, but those notes fields are somebody typing something in. And as you start to build those up in your data, that's where the insights start to become revealed. So we have maybe there's a salesperson that was on a call and they make a note afterwards. And if you were only looking at the data, you'd be like, well, we made one call on Thursday. That's interesting, but it's just a number. What happened during the call? And that has to be captured. And the tools like AI allow you to start to really get value out of that information over time. So that's a signal is a notes field in that sense.
So, with all of this unstructured data, a lot of firms suffer from information debt with files scattered across inboxes and legacy systems. For a company that is buried in PDFs and scanned documents, what's the most effective way to begin an inventory of all the hidden value that's scattered across the organization?
Yeah, it's a challenge, and it can feel like it can feel like a mess sometimes. Is all the things that people create, and people are people, and we're quirky and have individual habits, and you might do something differently than I do. Um, the good news is the technology is better at arranging it for you. So there's a certain element of if you just put it in the right place and point the AI at it, it will figure it out for you. And that's changing very quickly. So, I wouldn't rely too much on the robots here, but the reality is they're very good at taking the transcript of a call and saying, here's what Rita and Brendan talked about, and creating a couple of bullet points. And our conversation could have gone all over the place. So I wouldn't say that removes the need for good information management practices, but it does mean you need to centralize your information. And probably more importantly, you need to address the security concerns around introducing something like an AI to your environment. And I'm speaking from the perspective of someone working for a publicly held company in a highly regulated industry. Security's a real consideration, and you want to make sure all of the tools are vetted. So that might really be your first stop is make sure that some of this technology like AI satisfies the need of your security folks. But once there, having these repositories, and in the term, if you dig a little deeper on the technical, it's called context. And context is that supplemental information that gets pulled into AI. And I'll give you an example. I was using one of these tools probably about a year ago. It said, "Do you want me to write the agenda for a meeting?" And I said, "Sure, AI, write the agenda." And it came back with something very bland. Here are the action items and stakeholders. I thought that's not helpful. That's very, very generic. Well, I did this again recently, and this is after about a year a little less than a year of having a central repository with a lot of my notes and files and organizational information. I was just sure create an agenda. And this was for a topic that had played out over a couple of meetings and a few emails. It wasn't in one document. It was kind of diffuse. And it did a great job of analyzing what I was likely to want to talk to my team about in that agenda, and I couldn't have written it any better. And one of the key things that changed was creating a repository or giving the AI access to all the places this information lives. So that's a different way of thinking, I think, as far as how these tools work.
That's really cool. So, in systems of record, data needs to be 100% accurate. But within unstructured data, you mentioned that the picture isn't always perfect. So, how do you advise firms on how to balance the need for financial precision with all of the fuzzy insights?
Yeah. Um, I think again it's a yes and right. So all of the practices that have existed today, all of the accounting and auditing and validation that goes into creating solid numbers for a business, those are as important as they ever were. But you're reaching for information that gets added to that picture. Um, I think what one way to have this conversation with your financial folks is, um, you know, good financial analysts will look for the story behind numbers, and they'll look for trends and unusual variations. So something changed. All of a sudden, this is a lot less than it was last quarter. Well, what's the explanation? Sometimes they're very ordinary explanations, right? And you go, well, there are three less salespeople in that region, or whatever is known. It's the unknowns in the data where the narrative comes up. And I think that's where, in the right context, you can say, metrics, numbers, they're lag indicators. They're things that have often happened in the past that need to go into a ledger. And that continues, but you're going to look at those as a source of signal, going back to that term from before. And you're going to be looking for patterns and stories and emergent things out of the numbers. And then to understand it more, you're going to reach over for that unstructured data, those the notes fields, the context, the customer information that can explain a change to a number. So the two really should work hand in hand, and the right folks and the right organizational approach will help synthesize those two.
So let's say an equipment finance company wants to start using all of their data and they're looking into establishing maybe a strategic partnership. Um, how should they weigh the build versus buy options for something like custom AI data labeling?
Yeah, so I think it's a great question. I think one approach there, I think it's important to recognize that one of the key things that's transforming technology is AI is being used very effectively to write software. So coding is the first area of impact for a lot of AI. And a lot of firms have gotten to the point where people aren't writing software by hand. And that started again probably in tech firms in Silicon Valley, but it's spreading outward. We have folks here at Great American who are really trying to leverage some of this technology to write software faster. Well, why does that matter? It matters because the usual decision around build versus buy is your people reach to outside vendors for because they don't have enough bandwidth or because they don't have enough expertise. Well, the reality is, whether it's your internal folks or an external vendor, there should be more bandwidth for a lot of this. People should be able to go through their backlog or their list of projects and start doing those at a higher rate of speed because of this technology. Now, the expertise, on the other hand, that becomes even more important. And the one thing to remember is judgment and empathy are human centric. Those will always be with the people. So you want to ask what you do and what you want to continue to do and what makes your organization special. There might be things where you want to buy, you want to go outside to another vendor. Should be careful about those because your competitors might be able to do that as well. But you need to get those pieces from the outside. So I would just say that what is changing. A lot of it's the same. What do you want in house versus what you want out to go to outside for. But the fact that AI allows people to build things quicker, that should be a key factor. And I think we should ask ourselves and we should ask the vendors and service providers we work with, are you using these tools? How are you using these tools? How are you seeing benefit? People are talking about at least a 30% increase in productivity for something like software. Are you seeing that? And if not, what are the obstacles? Because if they say, well, we're not there yet because we don't have the security in place or we don't have the agreement, well, leaders need to ask, how can I remove those things? What can I do to get to a level where these tools make sense?
So digital transformation is an ongoing process. It never stops. Beyond traditional ROI, what are some key performance indicators that prove a company is actually becoming more digitally successful?
Yeah, I look at that and I think it's good to have kind of a market basket of metrics to have a little variety. So, and that might include harder metrics and soft metrics. I think the key one is around velocity. Are you moving quicker? Are you going from data to insights to decisions? Now, those things look different for different organizations, and velocity means something different for different organizations. If you drive the speed limit, are you going a little faster? If you always drive at 80 miles an hour, well, maybe this isn't a great example. You shouldn't drive that much faster than 80 miles an hour. But what is normal for your organization? So have a good baseline of what makes sense for your organization, and is that accelerated because of some of those efforts? That could be a little subjective. So I do think it's helpful to identify at least some areas where you can make a measurable efficiency gain. And again, a lot of innovation and a lot of what we're talking about with technology and AI can eliminate those tasks, going back to that view of not job replacement, but task replacement. You know, a lot of organizations have people responding to email and looking at the email. It's all in the inbox and they have to figure out what to do with it. It can be very time consuming. So a very, common scenario is how can we save time here so it doesn't take such a big chunk of our people's day to go through these communications? Well, baseline it. How many hours did you spend per whatever it is, per customer, per application, and can you get that down? So that's a little more quantifiable. It's a little more maybe ordinary in one sense, but those are important measures for innovation as well. So I think and then there's some subjective feel like, do the leaders of an organization feel like they're getting something out of it? Can they speak to it? And if asked, can they explain their innovation efforts, whether it's to stakeholders internally or externally? I think it's a range of things we should use to measure these efforts, but it goes from very practical ROI, where you've isolated a task and you said we're going to improve this, to those things that like we feel like we're going faster, and a lot of that is around the capture the data, see what insights are available to you, and can you make a decision based on that data.
So you've suggested creating an innovation project or an agile working group. How do you prevent those groups from becoming experimental side projects and instead ensure that they lead to enterprise-wide adoption?
Yeah, it's a great question, and I think in my career, I've seen both. I've seen things that have been sort of a flash in the pan effort. This is an area where I'll speak a little bit to our experience here at Great American. About 5 years ago, we decided that our insurance products were really due for some modernization, and we talk to our customers, we talk to the service providers that we work with, and we spent about a year really just sort of looking into this before we began to institutionalize it. Since then, we've released a range of new technology solutions, and we've had some great success. But the arc of that project was going from about, I think we had 3 or 4 people doing the initial sort of R&D, to several teams that we're building and our salespeople and marketing involved. And I think the key, and I can speak to us, but I do think this is probably true for any organization, is we had a leadership group that routinely communicated what we were doing and why we were doing it. It became part of our story. And we actually wrote a story, and it seems a little artificial, but we said, here's what we've always done, and here's who we're becoming. And that got socialized, in town hall meetings, quarterly meetings, routine check-ins. Not every time, but why are those people in that room? Why are they talking to that customer? Why are they going off to that conference to do that thing? But those things were explained, and it had to happen over the course of some periods of time where the results aren't necessarily apparent. So it's a sustained approach to innovation, and then that also institutionalizes it. It becomes something that we do. And I've seen organizations take that approach successfully. It really is very important these days in 2026, with the amount of change that is upon us with some of this technology, that companies do this, because competitively there's some forces out there that are going to maybe shift the market in the direction of companies that have greater capabilities or new offerings. And it's hard because companies are built on the success of the past. Like, any successful company is successful because of something they did 10 years ago, often, and it worked. And now they're sustaining their success. And they go, well, why would you change? Like, you have something that's working, but nothing ever stays still. So you have to be ready for the next thing. So innovation and this type of technology development has to be institutionalized, and it needs the continuous support of leaders. who can communicate that vision and often say, I know it's over the next hill. You can't see it, but it's there. And say that even when people start to sort of doubt.
So for the last question I have for you, I just wanted to go back to your article series. Um, if a person listening to this podcast only does one thing from your 6 ways to set yourself up for success list in this quarter, which one will have the greatest impact on their ability to compete this year?
Yeah, I would say in that article, I think the last item, I called it the culture of possibility. And I'd say that that is very foundational. And it goes back to some of the things I was just saying. But I don't think you can get at some of the other practices and really start to sort of drill into these areas where there's work to do unless it's cultural. I think people, companies are people first and behavior first. And being able to inspire people about what's possible, often in a very ordinary way. It sounds very aspirational here, but I think sometimes you're just saying, here's the work we've always done. We don't have to live that way. There's another way to do the work. So it might just be everyday work processes, but giving people the sense that the company is a dynamic living thing, an organization can change that is the most important thing because it'll go in different directions depending on what's authentic for an independent lessor. Maybe they're already thinking in terms of possibility because they're a new company and they know they have to compete against established players. Again, it's harder for the established players because they have something that works, but both of them need to see what the possibilities are. So I do think it's that level that where a lot of these things start. And by the way, as our industry looks at new talent and bringing, whether they're young people or recent entrants into equipment finance, I think they want to feel that possibility. I think they see a lot of established players. They see a lot of sort of, mature professionals who've been in the business for a while, and they want to think that they can impact the way the business works. And if they step into an organization where that's there, you're going to get so much out of them. You're going to see passion and energy. So I'd say that's what I consider to be pretty important.
It does sound very important. Well, Brendan, thank you so much for being on the podcast today and talking through all these questions. Thanks for writing the series too. It was great. I appreciate you taking the time.
Yes, it was great talking to you. Thanks, Rita.
Yeah, thank you.